breaking the norm, embracing the change. In DeFi we're born. You see, when you learn it, you gain, you elevate your game. You see, with knowledge, you earn it. The DeFi Club.
Good afternoon from Spain and welcome to the first live episode about Frax Finance ecosystem. I'm super excited because this is the second live event we are doing from the DeFi Club. Yesterday we had the one with Aniceto about VE tokenomics, and I have the pleasure and honor of being joined with my great friend Aniceto. Good afternoon, Juan. How are you doing?
Hello. Here, Aniceto. Can you see me? I am a stack of cakes here.
Yeah, really nice. First of all, Juan, for those who don't know you, how would you describe yourself and what is your background in the crypto space?
Well, I will say the most important thing, I am DeFi passionate. So I went very deep to all the DeFi projects. I do a lot of research on all the different new things that are coming to the crypto space. I work also as PancakeSwap ambassador, helping the community to get into this world. And I also do another program with Trust Wallet that is called Trust Squads. So yeah, it was a luck that I know you because you are also a DeFi passionate and we grow together.
The luck has been mine. It was really a pleasure to meet you in the smart con of Chainlink. So thank you very much. Also, before we start the presentation, let me introduce myself to the community. My name is Dimitri, though many of you might know me as FraxGod on Frax Telegram and Discord. And for those who don't know me, I'd like to describe myself as an engineer at heart who had the chance to be technical director of an industrial company. And since April 2022, I fully transitioned into the decentralized finance space full-time. So here I am. Hello again. Hope to see some Frax fam over there. I'm a huge fan of the Ethereum ecosystem, stablecoin maximalist, thanks to the incredible work of Sam K, the leader of Frax Finance, and the one who sparked my curiosity in this category of crypto assets. Some of the initiatives in which I involved right now include building a centralized exchange for businesses registered with Central Bank of Spain. We are spreading also educational content for Spanish community. Thanks to Aniceto, we also have some support of some Frax fam users like Sam McCulloch and Lewy. And just there is also an important communication for them, Juan, because we are working right now to launch B4 core contracts of PancakeSwap on Fraxtal in this Fraxtal Hackathon.
Yes, it's something we are thinking very hard, and hopefully we have something very tasty coming out of this. We think that is a nice opportunity there with this Fraxtal Hackathon to present very nice ideas, and we are going to try it.
Nice. Very nice. And also, with that little introduction out of the way, I'd like to clarify that nothing you see in this presentation should be taken as investment advice. The content you'll see is purely educational. And what I would love, though, is for you to interact through the chat by asking questions or starting debates. Both Juan and I enjoy a good challenge, so we'll do our best to explain complex topics in a simple way. And please ask whatever you want. And if I'm not mistaken, Juan, this is going to be the longest educational live event about Frax Finance ecosystem. Am I right?
If it's not the longest, at least it's going to be the best one.
Really nice. Yeah, we will be making every week live session on Frax Finance ecosystem. And we will be reviewing everything, Frax, Fraxtal, and so on, okay? So on next part, before we delve in, give me a while. I'm going to share the screen because we have prepared a presentation for this first crash course about Frax.
And I would like to ask you, Dimitri, why you fall in love with this project, Frax Finance, and what did you see that get your attention at what point, and how did your love for Frax Finance started?
Yeah, it's a good question. And I remember that I was studying in 2022 a paper of alchemics, a protocol that you can take a loan and that loan pay itself off. That blowed my mind. And I was studying this protocol. I remember a concept called AMOs, algorithmic market operation, for maintaining the parity of a synthetic asset. And that brought me to Frax Finance, and that's how I started my journey on this ecosystem. And since 2022, I've been focusing very deep in this protocol, and I fall in love. And yeah, that's a brief story about
Beautiful.
yeah. So here we have prepared an index, a very interesting index for covering several aspects of this live event. Here also, Juan, if you want, you can share some comments and the topic, and we can share with them. Okay, and
Okay.
yeah, let's dive in. On the first point, we will be talking about introduction to stablecoins. I think this is very important point. We will see that stablecoins is one of the 5 markets that will capitalize over $1 trillion of market cap. And there we will be covering an important aspects of trilemma design regarding stablecoins, market size, also very important, some kind of utilities, organic demands, and that stuff. On point number 2, we will be talking about value proposition of the protocol. And here there are like 2 visions. The one that the protocol gave till some days ago regarding M2 issuer of digital assets, and the one I think, or we think, could be our vision, Juan, regarding Frax Finance. I think it will be interesting for the users, and we can share also our vision. The third point is very, very important. It's about the DeFi Trinity. And this is a concept that Sam K coined on, I think it was mid-2022. And it's a very interesting topic. And by understanding this concept, we can anticipate some movement on the markets regarding upside or downwards. So it's really interesting. And this has to be with lending protocols. The fourth point is about protocol stablecoins. And I remember when I first came to Frax Finance ecosystem, I encountered a wide variety of applications and crypto assets, and that intimidated me. And maybe it can intimidate also to the users that are newcomers to this ecosystem. So I think it's important to understand, first of all, that there are 3 types of stablecoins, and each one of them has special applications. The fifth point also, Juan, I think will be very useful because all the protocols, they should have a token that captures value. And yeah, we will be commenting also some utilities. FXS also has some kind of VE tokenomics. This is a lesson that Aniceto covered the lesson on Monday. And very interesting one. If you have not watched this series, I recommend you to watch it. The point number 6, native applications, native protocol applications, very useful. And we will not be very deeply in the concepts, but it will link a lot with the point number 7, the opportunities for liquidity providers. And we will see that here on the market, there are 2 sides of the coin, the demand side and the supply side. So we will be looking for opportunities on the supply side. And here it's a very interesting one. And the last section is about Fraxtal and Fraxtal Hackathon. Very interesting one. And as we mentioned before, Juan and I, we are working on bringing PancakeSwap V4 core contracts on Fraxtal. And we have some support from the kitchen. I do not know if this is some alpha that we can bring to the table, Juan, or
Well, there is a process we need to follow,
yeah,
and we are working to follow this process. And it's better we don't
yeah,
leak too much
yeah,
before. But
yeah,
yes, basically, this is our plan is to bring PancakeSwap to Frax in some support of PancakeSwap. There is a process to follow with an affiliate program, and we are looking to follow this path, and
Mhm.
it's gonna be a nice journey for us.
Really, really nice. Yeah, yeah. Okay, so
I
before, yeah,
Before
go ahead.
starting, I would like to say, like when you meet someone like Dimitri, and you see that he loves stable coins and he studied stable coins instead of like other crypto bros, like what they talk you about the new gem or whatever. He is focused on learning about stable coins, and you will see a very nice class, and you will learn a lot about the stable coins in this small period of time.
Oh,
But so let's get started with the first part about the stable coins
yeah.
and what are they so important.
Yeah, thank you very much for the quick introduction, Aniceto. First of all, I also like to say hi to some users from the community from DeFi Club. We have Rene with us. Hello. We also have the great James. He's an expert of DeFi ecosystem, chaining advocate till recent weeks, very expert on that field. And we also have our friend PLB. We always have PLB with us, and it's great to have you, PLB. Okay, so let's start with
Also,
yeah,
James is also an expert on one of the topics that
yeah,
Frax is touching, that is the real world assets topic. We will see that Frax is have a position on this narrative as well. And
yeah,
yeah, nice to have James that is giving us some knowledge in the DeFi Club. So nice to have
yeah,
you
yeah.
here.
Nice to have you. Yeah, yeah. Thank you very much. Thank you very much, Juan. Okay, so the first point, it's really important, and I think we have here like four important statements before we understand Frax Finance ecosystem. It has to do with stablecoins. As I told you before, stablecoins market will be one of the markets, one of the 5 markets for me that will capitalize at over $1 trillion for sure. We have right now Bitcoin, which value proposition serves as long-term reserve value for holders. We saw its value when Silicon Valley Bank collapsed last year, when there was a panic on the crypto ecosystem. And I remember some users that asked me which crypto asset right now is secure for savings my portfolio. So Bitcoin here solved that kind of problem, and we saw them. So Bitcoin right now, it's one of the markets. The second one is Ethereum. That is a universal virtual machine in which we can deploy every business model without censorship. I think it's very powerful. When we hold ETH, for instance, we hold execution time on the most secure virtual machine on the world. And with this execution time, we can do a lot of things. We can deploy new business model. We can deposit ETH as collateral to mint stable coins. We can make DeFi with ETH. So this will be the second market that will capitalize over $1 trillion. The third one is regarding stable coins. We will be using as reference if an asset is outperforming, is doing well or is doing bad regarding some kind of reference. Fourth market, and here I think these are like two markets. This one has to do with decentralized Oracle network providers, because the data is, I think, very useful value, and Oracle providers bring on-chain data, real-world data to on-chain world. And right now we are seeing how some real world assets protocols need that kind of solutions. So all of them, we know Chainlink, but there are a lot of another players that are coming up, like Redstone, for instance. Redstone Oracles, very interesting on Fraxtal ecosystem. And that's the 4 market. And the 5 market, Juan, I'd like to ask you, because on Spain community, I've told sometimes, what will be the 5th market that will capitalize at over $1 trillion? I would like to ask you, do you know which one of them?
I will say it depends. You can categorize in different ways. I would like to think that this DeFi, like general in DeFi, will be capitalizing $1 trillion as well.
Yeah. Yeah. Totally agree, for sure. And I was referring to also this, my 5th market is regarding decentralized storage, because right now all the applications that are deployed, Web3 applications, are using centralized servers, are using the cloud, AWS, DigitalOcean, Google Cloud. But in order for be as decentralized as possible, I think we should change our ethos and try to give a try to markets like Rwave, Filecoin, and new ones that I think that will arise on the future. And for me, not right now because it's too early, will be the 5th market that will capitalize on these $1 trillion. Okay.
So this is the deep pin narrative that is going out in the.
Yeah, could be. Yeah. Also, yeah, the pin. Yeah.
Nice to know this also. Okay.
Yeah. And the second point here is this has to be that in the market we have more than 10,000 of crypto assets. And when we study each of the companies regarding Web3 applications, we see that the stablecoin issuers backed by fiat are the most profitable one. We will see in the next slide. And this is something that we have to take into consideration. So on this diagram, on this picture, this is from CoinGecko today, as stated of May 28. We see like the total market size. We have 161 million units of stable coins, thousand. And for me in English, it's a little bit difficult. How do you say, Juan? 160,000 million dollars of units, and there is a 24-hour volume. And this 24-hour volume is very important because there are some kind of fees. This kind of fees, we can earn them, and this is as of today. And it's very important, the ratio of these metrics. If we divide the 24-hour volume between market cap of stable coins, this number is like, for today, 36%. It means for each unit of stable coins that has been issued in DeFi, there has been trading in 24 hours, 0.36 units. These 0.36 units are generating some kind of fees. So it's important, and it's a good number. I think today it's not the day with the most volume that we can see on this market, but the good point here is the stable coins are moving around the globe, and it's are important to consider.
And one question, Dimitri. This is interesting. So this measure more or less what is the velocity of the money of stable coins. So you are watching this metric during several months right now, and how do you see this metric evolving? Do you think we are moving to a crypto market where the blockchains are getting faster, cheaper? Do you think this metric of the velocity of the money in stable coins is gonna grow a lot? How do you see that in the future?
Yeah, for sure. Here, it's a good point because there are several stable coins that has highest stablecoin velocity. There is one of them, like First Digital USD, and which has a stablecoin velocity of 2. It means if I am a market maker, I will put my liquidity on that side, because for every dollar of capitalization of this stablecoin, there is moving in 24 hours 2 units. So it's very good. And for today, the stablecoin velocity is lower than the week we had before. But I think with the adoption of crypto ecosystem and also with the evolving regulation on the market, stablecoin velocity should increase. The stablecoin velocity is higher for stablecoins like USDT, like USDC, and is very low for decentralized stablecoins as like DAI, like Frax, like Ethena. And I think here we should consider also, in order to increase stablecoin velocity, not to focus only on the investment side, but we should take into consideration when we want to spend with stablecoins and pay in commerces. When some DeFi protocols integrate that stuff, I think stablecoin velocity should increase. We should have a higher stablecoin velocity here.
So, for example, when we have better ways of paying with stable coins, like imagine all these credit card systems where you can put your stable coins and spend this money, that also will contribute to the increase of the velocity of the money of the stable coins. Nice. It's a great future coming, and I think we can see many new things coming from regulators. Also, we see United States, they are talking about these things. Maybe they create a clear legislation about the stable coins, and that make that make great things happening for stablecoin system with more clear rules and companies investing there.
Yeah, for sure. And next slide, it's if there are profitable that kind of companies. And here we have an article from Cointelegraph. This is the 1st of May, 2024. And it says that Tether nets record 4.5 billion in profit in the first quarter of 2024. The majority is thanks to Bitcoin and gold appreciation in price. But this is huge. This is huge because if I am not mistaken, Tether has like 40 employees. And if we divide on a quarter, this profit between employee, we have, I think, more than $112 million per employee. This is huge. I'd like to ask you, Juan, if you know some applications in the crypto space that has this kind of ratio.
Well, that's impressive, man. That's a good ratio. It's a bit confusing because not every employee will provide the same value to the company. But yeah, you can get an idea of what's going on. These systems are very efficient, way efficient than traditional finance at some cases like this. And you have some public information like the reports of the assets that are backing the Tether stablecoin that are public. Every quarter are public. You can go there and watch what is their profits, their benefits for the quarter, and it's a great business. Great business, to be honest.
Yeah, for sure. And maybe I think here the question could be, is it any way in which I can be shareholder of Tether and participate in that kind of revenue? Because I think right now it's not easy, or maybe it's impossible to be part of this kind of revenue. Because when I see that numbers, I will be the first one that I would like to have equity from Tether. So I think here it's a good point, because if we see these numbers, we see applications, we see demand. There exists on the decentralized ecosystem some protocols that can solve this problem, in which we can be part of the equity of these applications, and we can govern the future of that kind of applications.
Tell me more.
Yeah. On the next slide, also here we have to, I think it's important to bring to the table some important catalysts or organic demands for stablecoins. Some of them maybe are quite intuitive, we already know, but some of them maybe the user that is watching this webinar, he could not know. The easy one, the base unit of accounting, we have commented before. We have to have like a reference if an asset is outperforming or not. The second one is medium of value exchange. This is very important topic also. And it has to be, if I want to pay someone for something, the questions that I am asking to you, Juan, is would you pay on an asset that can increase in price in 5 years? Or maybe you will pay to someone in exchange of value if the asset devaluates over time.
Yeah, that remembers of something like the one guy paying some pizzas with Bitcoin, for example.
Yeah.
So yeah, there is a chance like if you expect your assets are gonna appreciate in the coming years, it's better to have your reference need to be in something more stable, or you prefer always to pay in fiat money that you know is gonna depreciate.
Yeah, that's right. Yeah. This is a very important topic, and here I think we could have great debates with Bitcoin maximalists, because I think they are the first ones that they do not contribute to the economy. They only want to save Bitcoin, but they do not put into circulation, or they do not pay in the economy with their Bitcoin. And it's okay, it's great, but here we have some kind of limitations on Bitcoin side. That's why I think fiat stablecoins, crypto stablecoins, solves that kind of problem as medium of because they bring value exchange. Okay. The third point, it's also very important, and that's why I decided to create right now building a centralized exchange for businesses, because there is a lot of business on fiat crypto on ramp and crypto fiat off ramp. If you guys analyze on CoinGecko, centralized exchanges like Coinbase, like Binance, like Kraken, you'll see that if you divide on the different pools, the different pairs that are listed, the volume traded between the liquidity provider, there is a ratio. The highest ratio are that one that are touching fiat currency with stablecoin currency. So this is a gold mine. This is a machine for making money. And they're also precisely the gateway. Stablecoins are the gateway to bring traditional money on crypto ecosystem. And the same vice versa, to get out the money from crypto ecosystem to traditional finance. So I think it's also here good utility right there. The third and the fifth point, I think, Juan, this is the most clear for the users, protection against market downturns, something quite straightforward, and generate passive income in DeFi with controlled volatility. Maybe this is the part that I use the most. And I'd like to ask you, Juan, if you on your portfolio, are you using also DeFi stablecoins?
Yeah, of course. I think it's a very important part of a portfolio. You need to have some liquidity, and when there is a blood in the streets, like we say, there is a very downturn in the market, and you can use your precious stable coins to buy at discount. So yeah, I think it's a very important part for the portfolio. And I would like to remember that the sentiment to the stable coins changed a lot. Like I remember when I started in crypto, it was like a sentiment against Tether, against stable coins, because they are the same. Like fiat money is broken, we all know that, and we don't want to use fiat. Why will we bring fiat stablecoins to the crypto markets? And it was some perception that they are bad, or they are trying, the bankers are trying to introduce this kind of crypto assets in our markets. But right now it's very different, and yeah, it fills all these functions that you mentioned.
Yeah, really, really nice data appreciation. And the last one, the last utility, Juan, you and I think we are monitoring as a measure of liquidity on the crypto space, and it has to do with leverage on lending platforms. When there is stablecoin incoming, there is potential leverage, and when potential leverage can arise, we can have increase of price. So I think it's very important for the ecosystem also that this is for me the sixth utility, and also we can create some kind of KPIs and use it in our benefit. Okay. So let's move on to another part. The stablecoin design trilemma. This is something also that Sam Kazemian introduced in the past. And when we want to design a stablecoin, we have to have in mind that there are like 3 features that are important for a stablecoin. And the normal situation is that we can only satisfy 2 of them. Okay, we are analyzing right here the peg, if a stablecoin can follow the peg bad or good. If a stablecoin is capital efficient, it has to do this point with the elasticity, demand elasticity. And the third part, and very important for the crypto users, is regarding decentralization. If there are some kind of regulators that can freeze some stablecoins, these are like 3 features that arise 3 different categories of stablecoins classifications. The first one is fiat-backed stablecoins. A lot of users know very well them. These stablecoins has the stablecoin velocity higher, and they satisfy that they follow very well the peg, and they are capital efficient. Here we have USDT from Tether, USDC, Trust USD, USDP, and the PayPal stablecoin also. Then, and on the left side, we have a category of stablecoins that are collateralized with depth position on smart contracts, and here they satisfy 2 features. They follow very good the peg, and they are decentralized, but they are not capital efficient because, for instance, if we want to mint DAI, we want to put in circulation 100 units of DAI, we have to freeze or lock on a contract 160 units. So this is not efficient, and that's why it's difficult for DAI increase the supply. It's not as simpler as in the we had in the previous case. Also mention that we have here Liquidity USD, very common one, and GHO from Aave. And yes, here there are common features with them. I'd like to ask you, Juan, are you a user of any of that stablecoins, or are you more user on the right side?
Yeah, good question. From my side, I have most of my stablecoin portfolio right now are on the ones that are on the right side. I think mostly Tether, USDC. These are 2 stablecoins I like. I trust them, but yeah, I know they are not decentralized. But I don't know if I use them also to generate some rewards in a liquidity pool. These 2 stablecoins are the ones that the users knows the most, and they use them. They use these 2 stablecoins a lot, so they generate also good rewards in the pools. So
yeah, that's nice. And yeah, stablecoin velocity also is higher, so on the pair that touches another crypto assets, you will earn more fees. So this is something that here on the other side we have some kind of limitations. Yeah, I'm totally agree with you also, Juan. I here with the left side, I don't use them too much. I have used DAI sometimes in some liquidity pairs, but yeah, still I think it's too early for the users to be aware of some limitations also. And yeah, but we will see on the next phases. The last classification, the last category has to do with algorithmic stablecoins. Here we saw some death spirals. We already remember what happened to Luna ecosystem with USDC, and that was terrible. A complete ecosystem collapsed in few days, and this has to do with endogenous collateral. So algorithmic stablecoins with endogenous collateral has this kind of issues. Then we also has another stablecoins with exogenous collateral, like FEI, for instance. But that stablecoins are decentralized, are capital efficient, but they have difficulties to maintaining the peg. And here I think it's like the most risky ones. I wanted to ask you here, did you use USDC when Terra collapsed? One
UST, no,
USDC, yeah,
I
UST.
avoided. I remember I was part of a DAO at that time, and we were doing the research, and we pointed that it was some risk regarding the UST stablecoin, and we had some treasury of the DAO working on the Anchor protocol of Terra Luna, and we take it away. So we saved the treasury from this collapse. It was a nice movement.
Nice, really nice. Yeah, I think it's great also that that situation happens because it's a natural selection mechanism that we have in the space. And the good point about on-chain markets are that are very fast. And if something is not working good, it will collapse. And I think there are a lot of lessons that a lot of stablecoin issuers has learned from the past. And that's why Frax started as algorithmic stablecoins and right now has evolved to what I think it's the new generation stablecoins. These are like hybrid models. For me, are the most elegant designs, the most elegant architecture, and they can be moving around these vertices around the triangle. And we have, for instance, CRV USD, Frax, and USD from Ethena. I didn't know how if I can select them on one category or another. I would like to ask you, Juan, do you think for you it's correct, this classification that I'm giving to you?
Yeah, it's very interesting to see. All we have many similar trilemmas on the crypto space, and this is basically a easy way to show that you cannot have everything.
Yeah.
We have a expression in Spanish language that is say you cannot have chocolate and bacon at the same time. So it's
Totally
just
agree.
basically choosing some trade-offs you need to choose.
Yeah, that's right. And also these trade-offs, I think they can be changing depending on the market situation. I think that's a great point. They can evolve with market conditions. And this is good resiliences for them. USDE from Ethena, there has been few time. We have to see if how will evolve in the future. Maybe Frax is the one that has most time on the market. and we will see how it behaves. Going to the second point, we will be talking about the value proposition of Frax Finance, and the first one is the one provided by the protocol until recently. I remember that Sam K and a lot of Fraximalists talked about the Frax Finance ecosystem, like the M2 issuer for the most important digital assets of 21st century. I remember when I heard the podcast about the M2, I didn't know what was about. Okay, so I had to make a little research and make the analogy, and here you have the classification. On one side we have the M1. This is economic. In English, do you say aggregators? Economic supply, money supply aggregator, yeah. M1 and M2, and we compare with traditional finance and decentralized finance. For instance, in M1, in traditional finance, we have cash and demand deposits. It means there are like physical money in circulation, there are no restrictions. We all know that kind of money. The analogy in the decentralized finance space is to have native Bitcoin issued, native ETH, native DAI, and that's the idea, okay? When we go to the M2 money market, we have some kind of restrictions, some kind of limitations. For instance, in traditional finance, we have saving accounts and term deposits, and here we have like withdrawal limits and fixed term regarding the withdrawals. So here we are sacrificing something, but they are giving us something in exchange. For instance, they pay us some kind of interest. Can be higher, can be lower, but always there is this kind of payoff here. And if we bring this analogy to the decentralized finance ecosystem, we will see that making the analogy from Bitcoin, we can have Frax Bitcoin. This will have this will be a yield-bearing asset that will pay you something. From ETH, we have Frax ETH. They are paying us some ETH, and for stablecoins, or Frax stablecoin, for instance, we have Frax. Okay, there are yield-bearing assets in which we are depositing something on a vault, and they are giving us some kind of interest, and that's the idea. So I think, Juan, it's very ambitious, and I'd like to ask you about this value proposition of Frax Finance. Are you agree?
Yeah, it's very nice and it makes a lot of sense. Like when you understand decentralized finance, you understand that you need to keep your money working all the time. You see block by block how you are getting rewards, points, whatever is happening. So you don't want to have just an asset in your wallet that is there waiting to get appreciation. You want to have this kind of product where even like it's a single token of Frax ETH, for example, it intrinsic value increase because it's generating the yield of the staking. So yeah, it's a beautiful product, easy to understand, but there is still a lot of education to be done for the people to adopt these kind of products.
Yeah, for sure. I think this definition is very nice for financial experts and very bullish for them, because regarding M2, it comprises M1 plus all that we can have here, and here there are huge markets on traditional finance, and we can see on decentralized finance the analogy the same. So from financial experts' perspective, very bullish idea, but for the rest of the users, the retailers and the mortals, here we have like our own, maybe the vision. How do we see Frax Finance is like the most innovative on-chain central bank with 6 clearly differentiated business lines. I think, Juan, don't know if you are agree with this simpler definition. For me, it's very bullish because next we will see there is a token that we can capture of this differentiate business lines. And yeah, here we are making this analogy in traditional finance again and decentralized finance. For instance, we as users on the crypto space, the peculiarity, or maybe the something new that has Frax Finance, is this algorithmic market operator. And the analogy in the traditional finance is like open market operations, buy and sells of bonds by central banks. I think this is like this analogy. Frax Finance, this is something that has implemented on several applications. And the important part here is we as a users, I think we cannot participate directly of minting Frax stablecoin or redeeming, because I think the AMO is in charge of doing that. But then if we move on with the second part, second differentiate business line is decentralized finance, decentralized exchange. Here we already know to exchange one asset to another, or maybe we want to exchange one asset from one chain to another chain. And here we have on Frax Finance, Frax Swap for exchanging crypto assets, and Frax Ferry for exchanging one crypto asset from one network to another. If we compare with traditional finance, I think here I'm extracting from Captain Rational. He has very good videos explaining that analogy, and I'm inheriting this definition from him. And thank you, Juan, because you were the one that you told me about that great man, the Captain Rational. Forex markets, generates a lot of fees, so we have to take into consideration. Moving on the third business line, we have decentralized lending. In Frax Finance, we have Fraxlend. In traditional finance, we have bank loan market. Okay. Then if we move on to the fourth, here Captain Rational tells us that liquid staking for him is like the derivatives markets. I'm agree also, but maybe we can think in traditional finance as term deposit market. So this is like this kind of analogy. So on Frax, we have Frax Ether. We will see on next slides that this is the module that captures the most TVL from the protocol. And right now there is also building, we will see version 2 of that module, very interesting one. And the fifth business line, and maybe some people were not aware of, is that Frax Finance is working with real world assets. They have tokenized real world assets. And here we have like two products, Stake Frax and Frax Bonds. And I'm very bullish on that kind of markets. And when I am telling you that I'm very bullish, we already know that there is this decentralized investment fund called Beetle from BlackRock. And if we analyze this wallet, we will see that they are interacting right now with Ondo Finance, and the other one was Flux Finance, and they has to do with real world assets. So Frax has these two applications embedded in their vertical stack. And the last one, and I think it's brilliant movement, is regarding settlement and custody services. That in traditional finance, there is an intermediary, and decentralized finance, we can do it with a blockchain. And if we point it out, we have Fraxtal, and that's something very powerful concept. We will analyze this on next slides, this brilliant concept. And what do you think regarding that statement, Juan?
Yeah, it's very nice to see this. This is nice to have the comparison of traditional finance product and the ones that Frax created. And it's not only that, so many different products. It's like they have interactions and synergies one to the other. So we will see that later, more explained in the trilemma. But yeah, it's a very beautiful design. One of the things when I met Frax Finance was maybe there is too many things here, and they cannot build everything, you know. So, but yeah, it's a great team, and they deliver, and they don't stop, and they came with creative ideas. So it's very nice to see the potential of something like this, a decentralized bank on chain.
Yeah.
Very bullish as well.
Yeah. Totally, I'm totally agreeing with that statement. Thank you very much, Juan, for the clarification. And moving on, the next point, it's very important concept also to understand the DeFi Trinity, because understanding that concept, we can have like some advanced KPIs we can monitor, and we can position before market movements. Okay. So this is a term coined by Sam Kazemian, as I told you before, and I think it was mid 2022. And he says that to achieve DeFi dominance, a project will require its own stablecoin, a decentralized exchange, and a lending application. This is very unique definition. I love that definition. I'm totally agree with that definition. And we have seen that Frax Finance was the first ecosystem that embedded these three applications in one protocol. Right now, we are seeing like another protocols like Cure Finance. They launched the Llama minting mechanism for CRV USD. They complete the stablecoin part. And recently, they also launched the Llama Lend for the lending part. We also have seen another protocol, Aave protocol, for instance. They had lending facility. They launched GHO several months ago, but still they are missing this part. MakerDAO, for instance, they had stablecoins. We already know that, DAI. They have Spark that is in charge of the lending module, and we will see which one they will be utilizing as decentralized exchange facility. But here the point is what we are going to cover right now. For instance, if we want as a user to earn some passive income, we will see next slides on some stablecoins, we have to deposit stablecoin as collateral. So here we create a demand, a catalyst for a stablecoin, for minting stablecoin. Then also, if we want to be LP provider on a decentralized exchange facility, maybe we want to pair stablecoin with ETH or stablecoin with BTC. Then we will have to have stablecoin as a trading pair. So we create additional demand. But also there is an important concept. If we want to make leverage on lending platforms, if we want to leverage on collaterals, on Bitcoin, for instance, we will have to take a loan on stable coins. These stable coins, then we make the swap for volatile crypto assets, and when we deposit again, and that leverage provides also additional demand for lending platforms. So this is a brilliant mechanism. All these three modules generate fees, and they are interconnected. And I think it's also important, Juan, for risk assessment, that you do not depend on third parties for that kind of applications. What do you think about that? Because if I'm not wrong, Venus Protocol, for instance, in the PancakeSwap environment, they are using PancakeSwap as the decentralized exchange. Am I right?
Yes, they put a module of swap, like they are using all the routers of PancakeSwap. That is correct. The difference is, like you say here, if you control all the different products, you are making fees in every step. So you are generating in each of the steps you are using in the same. We will see later. They try to control all the vertical, all the products. If you can think, for example, in a traditional business like a food business. They control all the process from the farm to the moment that they sell to the final customers. If you control all these points, you can have better benefits for you, like having more revenue for the. And we need to remember, all of these products, they generate value to the FXS token. So it's going to be a part from all the fees that these products are generating that are going to give value to the token FXS. We will see that later.
Yeah, that's right. That's right. Thank you very much for the point, Juan. Moving on, regarding protocol stablecoins, it's important to mention that Frax Finance has three important stablecoins. The left one is the one pegged to the US dollar. We already know some of them, the crypto users. I think this is the most crypto asset stablecoin that we use on a daily basis. And here we have a market cap of around $650 million of capitalization. But the trading, 24-hour trading volume, I think it's very low compared to the market cap. Here, as we talked before, stablecoin velocity is low. And I think here there is some room for improvement, for development, and maybe it will be interesting to make integrations for the users in order to they can spend using Frax in some commerce. For instance, the Gnosis Pay card, in which you can here it's already working on Europe. I can charge with Euro stablecoin, and with this Euro stablecoin, I can pay in commerce. That stuff it's good for stablecoin because I have to buy first this Euro stablecoin, then charge smart contracts, and then there is a crypto fiat of ramp. Okay, so here there is a great business also, and I think here Frax should explore that line, and this will increase the stablecoin velocity of Frax. Also, the integration of centralized exchanges as a pair with another crypto assets, it's important to highlight. Then moving on, we have the second stablecoin, Frax Price Index. This is pegged to a basket of consumer goods, and they create its own unit of account separate from any nation state denominated money. From my point of view, I not used this stablecoin, but I think it will be very useful when we are in low interest rates, market conditions, and maybe if we want to save, it will be a great point to save from here because it will create inflation on the future. Right now, there is, I think, as you can see in the numbers, market cap, it's around 100 million. Trading volume, it's insignificant. That's because there are not useful use cases on the ecosystem. I wanted to ask you here, Juan, what are your thoughts about this FPI stablecoin? Do you think will be useful in the future?
It's interesting. This design of a floating stablecoin is something that some people is exploring in different ways, and yeah, maybe there are possibilities to have something in the future that at the end is useful. You buy this stablecoin, makes you don't lose your purchasing power. That is one of the problems we are experimenting in the last years, where inflation was quite high, even reached levels of 10%. So if you want to be safe, okay, I don't want to lose purchase power through this inflation that is constant, this is an option.
Mm-hmm. Yeah, totally agree. Totally agree with that point. And moving on with the third one, some of you maybe you don't expect that Frax is a stablecoin, but it is a stablecoin because it's not pegged to the US dollar, it's pegged to the ETH price. And Frax ETH is used as a replacement for WETH. We already know WETH in smart contracts for making DeFi. But Frax ETH is a token that is intrinsically related to stake Frax ETH, the yield-bearing asset, the asset that it accumulates rewards for securing the Ethereum network. Here we have more than $773 million of capitalization. And the trading volume is not very big. Also, stablecoin velocity is low. But we expect that with the usage of Fraxtal, we will cover on the next subsequent slides. On Fraxtal, the token that we need to pay the gas to settle the transactions on the ledger is Frax ETH. So on next episode, we will see this game theory mechanism behind the scenes and how we can leverage on using Pendle Finance, for instance, because we can trade with the accruing rewards part of this stake Frax ETH if we have expectation that we will have more demand, more interaction of Fraxtal. This is a very powerful concept. Okay. So, yeah. Moving on, the fifth part regarding the FXS token and utilities, we have covered protocol stablecoins, but which asset governs that stablecoins? It's the FXS token. Is FXS token. This is an asset, a crypto asset that was deployed on December 2020, and each December 20, there is a halving event. It means we cut the emissions of the liquidity mining program to the half. Okay, right now at that moment of speaking, we have issuance of 3,125 FXS per day, and on the tokenomics, they're going to exist 100 million units. Right now we have in circulation around 80%. And some kind of utilities of the FXS token is to govern the protocol. As we can see here, we can decide how we can govern parameters of stablecoins. We can govern also on the applications that we will see on the next slide. But I think here there are one very important aspect. And when I asked if you wanted to take part of the revenue that a stablecoin issuer could generate, here we have the answer. We can receive the cash flows from all the applications, the 6 business lines that is already running Frax Finance. Okay, so we will see also here, in order to participate in these cash flows, we will have to lock on a contract, the FXS token. We will receive both escrow FXS, and we will earn these APRs, these incomes. And the third utility, very important, is regarding ecosystem growth. Right now, as you can see, 60% of the tokenomics are for liquidity mining programs. They are called gauges, and they are incentivizing for the ecosystem expansion. Okay, right now, Frax Finance is issuing around, if we multiply this amount of FXS per day per market price, I think we have like $13 and $500,000 that Frax Finance is issuing per day in value, okay, on these liquidity mining programs. And the last part, and here very important one, is regarding some important ratio, KPIs. You already know them, Juan. This is the price to earnings ratio and the TVL per market cap. Would you like to explain to the users these both metrics?
Oof, I'm I'm gonna leave to you. You are the expert. Yeah, you have it more clear, I think.
Okay. So here we have the price to earnings, a very important metrics. It told us how much an investor is willing to pay per share per unit of revenue that a protocol or project is generating. So here we have 10. It means that an investor is willing to pay $10 per dollar of revenue that Frax Finance is generating. If we traduce it to numbers, right now here I'm taking Google Sheet that Mark prepared to us on the Frax Finance Telegram. We have a revenue sheet, and they are making like $33 million of revenue of all the applications. And if we divide this revenue, if we divide the capitalization of FXS token and the revenue, we will have an amount of 10. Right now we have a market cap of 350 million for FXS, and we have this revenue of around 35 million. So I think this is very conservative metrics if we compare with the competence that is MakerDAO. MakerDAO, it's rated this ratio on 33. So if the market will see Frax at the same as MakerDAO, we had to have the FXS price should have 3 times more than the one that we have right now, that I think is like 4.4 or around that. So FXS maybe we should have like between $12 and $13 per unit. That's an important metric. I think this protocol is undervalued. It's complex to understand, and that's why we are making that kind of webinar that maybe the users are a little bit more aware of, and I think it's important. And the other metric, the TVL per market cap, it means per $1 of market cap of FXS, how much protocol absorbs in total value. And it says that for 1 unit of FXS, they absorb $4. This is bigger. We have for MKR, I think it's around 3.5. So as a FXS Frax Finance advocate, I could say that I think for me, from my point of view, FXS is undervalued. What are your thoughts regarding that, Juan?
Yeah, very nice metrics to show here. I think the same. It's very well explained what you say about the pair ratio. Is something, the lower it is, the most undervalued a project is. It's true that this metric is used a lot in traditional finance to analyze a company, and this is a paradigm here. Like these are new business, like are emerging right now, like Frax Finance and many others, and there are some things that are new comparing to traditional finance, and we need to find new metrics. But this one is very clear about the revenue that a protocol is generating, and yeah, it's pretty well explained that is something we are looking into, and it's something that many people, even in the crypto space, don't know about Frax Finance. So we are here doing this kind of webinar, creating content to get Frax Finance known for some of the DeFi users.
Yeah. Thank you very much, Juan, for the point. Totally agree. Yeah. The next part is maybe the most important part for all the users. Everything, the theory is great, but tell me a little bit more about the applications, the native applications. And here we have the classification. If we want to participate in the decentralized exchange application market, we can use FraxSwap and we can use FraxFerry. Okay. If we want to exchange one crypto asset to another, we can do it for FraxSwap. There is deep liquidity. For instance, if we want to buy FXS, a good place to do it is through FraxSwap because there are a lot of liquidity for that purpose. If we want to exchange FXS from Ethereum network to Arbitrum, the good application is FraxFerry. We can use it and very useful also. Regarding lending application, we have FraxLend. This is an isolated pool market for that connect lenders and borrowers. From a risk perspective, it's safer than Aave design, and few people really know the mechanics behind this mechanism, and this is something that we will be covering in subsequent lessons. Moving on the Frax ETH, if we want to expose ourselves to ETH yields natively, we can use Frax ETH. Historically, we had the highest rewards, organic rewards on this module. I think this week the numbers lower down a little bit, and we were below the market, below competitors like Lido, like another liquid staking token derivatives. Sorry, I have here an alert. Okay, so yeah, here we have the module. Then if we want to expose or use ourselves to real world asset applications, we have Stake Frax and we have Frax Bonds. The difference is slight. Here we are going to lend Frax to the protocol, and they will deploy on some real world asset strategy. And here we will lend Frax to the protocol, and they will deploy, I think, on some real world asset strategy, but also some DeFi strategy. Okay, and they are bringing up the yield to us. And the last part is Fraxtal, very useful because here we have a new chain, very efficient, very fast, and there are a lot of opportunities here. And here we can positionate ourselves and participate in very interesting liquidity mining programs that we will see also in subsequent lessons.
So if you hate Ethereum fees that are very high, you don't have an excuse anymore. We have Fraxtal is already live, and it's growing, and there is new projects coming to build in Fraxtal with very cheap fees and very fast.
Yeah, and here is where we want to build. We will be commenting after we finish this presentation about the hackathon, because it's very powerful, the design, and we will see some slides after. If we compare the total value locked as of today, we can extract this info from facts.frax.finance, and also the TVL from Fraxtal I'm extracting from l2bits.com. These four modules capture $1.4 billion. This is, I think, huge. And it's important to highlight that Frax ETH absorbs more than half of the TVL, 55.5%, really interesting. And we are seeing also, as week by week, the TVL on Fraxtal is increasing. Also very interesting metric. The good point here is that if we have FXS token, we can receive a share of the profits generated by a stablecoin issuer. And here we have the different applications. And this is something really, really interesting. We have commented after. And here, the most interesting part is the opportunity for liquidity providers. Here we have plotted a really nice diagram. How would be a user journey if we want to position ourselves on a site on the market that is the supply side of the market, because all the markets have a supply side and demand side. Here we are seeing the Frax Finance ecosystem from the supply side. That here we can generate passive income every 15 seconds. Okay, so everything starts with the user, and as a users, we have to decide in which network we want to use the applications. Maybe we are institutional investors and we want to use the Ethereum security because it's the most decentralized smart contracts network, and institutional money is already there, so we can decide moving there. The drawback here is the gas are quite expensive if we compare with another solution, the L2 layer solution. Okay, so if we want, for instance, using everything that we are going to comment on that side, we can move to Arbitrum or Optimism or another network, and we will be using Frax Ferry. Okay. If we want to use this novel L2 network, the Fraxtal network, we can use its native bridge, Fraxtal Bridge. And here the good point is very fast transaction and very efficient, very costless also transactions. Okay. Moving on, if we want to earn income, we have to ask ourselves if we want to expose ourselves to the volatility measured in US dollar. If we don't want to expose ourselves to volatility, we go to this line. Then the next question, if we want to deposit on a single site, this is the same, one only crypto asset or several crypto assets. If we only want to put, want to put more than one crypto asset, one side, no, here, yeah. If we want to put several crypto assets, we will have exposure to several crypto assets. We will be using FraxSwap, and we will be using here stable LP tokens, okay? Like Frax USDC, for instance. If we only want to deposit single site stablecoin, the next question is, we want to use real world assets. If the answer is yes, we have stake Frax and Frax bonds. So we only have to deposit Frax stablecoin. We receive the ERC4626 token in this case, and ERC20 token for that case. Okay, if I am not wrong, I'm not mistaken. And we do not want to expose to real world assets strategies, then we use Fraxlet. We here deposit stablecoin, and there will be another part of the market that will take a loan, and they will pay us some interest. And the last part is here, if we want to expose ourselves to the volatility of the market, the next question is, we want to expose ourselves to ETH. If the answer is yes, then we have Frax Ether, if we only have to exposure to Frax Ether. And if the answer is no, then we will be using FraxSwap, pairing with stable with volatile asset or volatile crypto asset. I think, Juan, this is a very useful diagram for the user, and maybe for the beginners can serve as a compass for the.
Yes, it's something like, for example, people that are not interacting with the crypto markets right now, is something very important for them to understand that they can generate revenue investing in stable coins. Like you said on the top part, okay, I don't want volatility and all these crazy markets. Okay, you have a very nice way to generate very nice revenue with exposure to the United States dollar.
Yeah.
So this is something where when the people realize that they can generate this kind of revenue and the friction to enter to the crypto markets is very low, you will see boomers entering to the to the market with all the dollars and generating yields.
Yeah. Totally agree. And also, I'd like to comment that in the solution that we are building on the Decentralized exchange right now here, I want to integrate that kind of mechanisms, that kind of logics on some services that I'd like to provide to our customers in a very simple way. And yes, that's the good point. I think these kind of diagrams can also help some institutions to use DeFi and to offer to their customers good yield on stable coins without the exposure of price volatility. Here, what I would like to comment here is sometimes I told you, Juan, I like to have Euro stablecoin also, and I do not have Euro stablecoin. Maybe we should create Euro stablecoin.
Yeah, it's something you told me before. Like there is other projects trying to build Euro stablecoins. For the moment, they are not very successful, and I think it's something that will come with the time.
Yeah.
Let's see.
Yeah, totally agree. Yeah. Okay, so yeah, here the last section is regarding Fraxtal. We will be covering each of different modules in subsequent lessons. Don't worry for the newcomers. And regarding the Fraxtal, this is a L2 EVM network. They are using the OP stack, and Fraxtal has created a unique algorithm called flux mechanism. And this flux mechanism, it's based on PageRank, a solution that Google uses for the ranking website pages, and they are bringing that concept on chain. So here in this diagram, if a user, for instance, want to make a swap from USDC to Frax using a curve pool, but instead of using the front end from Curve, they are using the aggregator 1 inch, we have this very nice picture. The user makes a swap through 1 inch router. He gives USDC, they give back Frax, and in this operation, the user spend gas. This gas is Fraxit. When the user spend gas, there is some points that are distributed weekly, every Wednesday, based on his activity. But the user not only gains these points, who more gains these points? One, external own accounts, like this user, and two, smart contracts accounts. Like there is a smart contract router account for 1 inch, so they gain FXTL points. Also, like 1 inch is using below a curve pool, this LP token is a smart contracts, they gain FXTL points, but as this curve pool, they have below another smart contracts that are underlying assets, they also underlying assets gain FXTL points. So this is unique mechanism, very powerful. A lot of, I think very few people understand its potential. And Juan, and I think that here a few nerds as you and me see this potential here.
Yes, because this is very interesting, and people probably understand it like you were talking about the Google mechanism to position the web page on the top. This is called a SEO. Is some marketing things involving to position your web page on the top of Google search. So this is very similar, where it's gonna be a competition for the protocols building on Fraxtal, the different contracts, the different pools, and to get attention, and the contracts that are used the more, they gain Fraxtal points. That for the moment we don't have information about how this can be liquid later, but this is a beautiful design of a mechanism that will attract not only liquidity, also will attract developers building important contracts that get used the most, and they can earn some revenue through that.
Yeah, for sure. And I am also eager to know what underlying asset is tokenized, these FXTL points. because on the documentation it says maybe FXTL will be a token which secures the Fraxtal chain, or maybe FXTL corresponds to some kind of amount of FXS token, or maybe it will be a mix of both. So I think it will be interesting to know. And we are practically early adopters using this chain with unique features, and totally agree, yeah, Juan, with the one that you commented. Here we have another example for someone if they want to borrow a Frax stablecoin from Fraxland pair market. And this borrow operation, they have to deposit wrap BTC as collateral and then take a loan on Frax. This operation consumes Frax ETH. This is the gas to settle the ledger on Fraxtal. We are earning points, but good point here also is that Oracle providers also for this pair, also they gain FXTL points. So Oracle providers here, a good point. We want Juan also to bring B4 core contracts to Fraxtal. And here there is a concept called hooks. So all the developers that they develop hooks, they will earn FXTL points. So I think this, for a developer perspective, reduces a lot the opportunity costs. Because if you want to deploy an application right now, which blockchain you would choose? One that pay you with user interaction, or in one that you have to spend gas for deploying smart contracts? And that creates a new dynamics, a new layer of innovation. And this is such a very powerful concept. And I hope this Fraxtal Hackathon aware a little bit more to the users on the crypto space. And I hope also, Juan, that we could present definitely the solution for before contracts on Fraxtal, because I think we could help a lot on bringing TVL to this chain.
Yeah, great. Is something very bullish for us. We understand the possibilities are endless. Like if you can personalize the pools with these hooks, and together with this flux mechanism, is something that can bring very interesting flywheels there. Like let's say it's not only a flywheel effect on the developers, that you attract more developers to build hooks in here, and they get rewarded with these points as well of other rewards, because also in the hooks you can put a fee inside the hook that the developer get rewarded if this hook is used. So this is a complementary revenue as well. Not only that, attract developers, also attract liquidity, and it gets sticky if we design some specific hooks that are for the people, for example, that have more Fraxtal points, that incentivize the people to stay in Fraxtal chain using the blockchain, getting more points and getting better rewards because these personalized pools with some specific hooks that we can build.
Yeah, totally agree. And here also I would like to add, Juan, maybe it's not correct, but I'd like to say that if there is some backend developer looking this video, he could join us. Yeah, because I think we need this guy, and yeah, to develop this solution on the Fraxtal network. Okay, so yeah, that was all. Here we have some KPI metrics, but I think we have on the webinar 1 hour and half. So maybe it would be great that we comment, Juan, if you want, regarding hackathon, how we can participate here, and we have
Yeah,
here the details.
it's with Dollar Hacks. It's a well-known place for hackathons. It's a lot of incentives to participate on this hackathon. There is prizes that you can watch on the webpage. They release a video on YouTube as well. It was 2 hours ago, something like that, that you can watch on YouTube, and they will give you there all the details on how to participate. And also in the website, you can go there. You can inscribe yourself like a hacker in the hackathon, and you can find some teammate like us and participate in some innovative ideas like the one we explained to you. And at the end, that consists in building some new interesting projects on top of Fraxtal. So yeah, I think it's a very nice opportunity. And if you can say something else, Dimitri, there is some deadlines like we
Yeah.
need to comply.
Yeah. Here, yeah, good point is we have like 3 weeks to build in the submission period. Then the final date of submissions and the 21st of June. Then the next week will be a review period, and July we'll have like the live stream for demo presentation. I think the powerful from this hackathon is not only this prize, okay, for the 5 best applications, but you can have some judges and mentors that are really OGs from DeFi ecosystem, like Sam K, the founder of Frax, Mikhail Egorov, the founder of Cube Finance. For me, to have like mentorship from these guys, it's more price. But it's more valuable than an economic price. We also have Travis from the core Frax Finance, the creator from BAM, really interesting, and some venture capital like Ouroboros, Multicoin Capital, Dragonfly. Well, really interesting to take a look. Okay. Here we have one questions from the great PLB, and he is asking about if I can explain how the stablecoin Frax maintain its parity. It's a very good question. It's a very good question, that one, because Frax uses algorithmic market operations, and Frax is paired with other stablecoins in the market, with fiat stablecoins like USDC, like PYUSD, like DAI, that kind of assets. And when there is small difference on the price, if the Frax asset is undervalued regarding to the dollar, it means we have excess of Frax tokens on the ecosystem. Then we have to reduce the number. So algorithmic market operation take place, and they reduce the supply of Frax stablecoins. If Frax stablecoin is valuing more than $1, then we have a defect on Frax stablecoin. The market demands more. So algorithmic market operators means more stablecoin Frax. We have more supply of Frax, then the price goes again to $1. So that's the mechanism behind maintaining the parity. Okay, good question here. And yes, I don't know if you have some more questions. We have, yeah, 18. Right now I was reading, Juan, ponemos la canción de inglés en el chat privado. We are speaking Spanish right now.
No, that was for the introduction video of the yes.
Okay, so thank you very much for those of you who have seen this live event. You have been here on the direct. Here we have PLB. Are there currently any partnerships working with Frax Finance? Good questions. And yes, there are a lot of partnerships that Frax Finance is integrating. Right now, I think on a weekly basis, there are like 2 to 3 partnerships with different cross-chain applications, different networks, and very interesting consolidated applications also. And more partnerships will come in the future also.
Yeah.
Frax Cake Swap will be one of them.
And you have a web page. The web page of Frax Finance, you find one page with all the different protocols that are building on
Here in the ecosystem. That's right.
These are a list of all different protocols building on Fraxtal right now. And there are some well-known protocols: Curve, Convex, Bifi, Axelar. We have some meme coins, whatever. Yeah, many different protocols building.
Yeah, really interesting. And not every one of them is already deployed. I think if we want to interest, we will see there is Ra, Owito Finance for cross-chain applications. Redstone is the Oracle provided decentralized Oracle network provider. StakeDAO, I do not know if we have already available liquid lockers on Fraxtal. I think still not. We also have the Cure Finance already deployed on Fraxtal. We have some meme coins. Convex also is already deployed. Bifi for bouts, auto compounding bouts. Axelar. And then I think if I had to choose one meme coin, I think the more powerful is this one, Real World Apps. I don't know, what do you think about that meme coin?
Yeah, it's just funny, like all the meme coins. No, not much serious, but how is behaving in price? I know they give a nice airdrop.
Yeah, I had an airdrop on Fraxtal RWA, where it is. Dex Tools and es Gecko Terminal. RWA. Arbitrum. This one. Oh, very few activity.
No volume at all in 7 days.
No. Very practical. There is no volume. Very few volume. Yeah. Okay. Yeah. Still a lot of work to be done here on Frax ecosystem. We will see. We are on a eager phase, and in this eager phase, there is some kind of risks also, but some kind of risks. There is also that they yield to good rewards. So if we position ourselves in some of these protocols that have deployed on Fraxtal, we can earn some really interesting passive income. But don't worry, we will see on subsequent lessons. So for my point one, I really enjoyed this episode with you. Thank you very much for being here.
Thank you very much. Yeah, thank you very much, Dimitri, for this masterclass on Frax Finance with all your knowledge and how you presented. It was, I think, very clear. Even if the topic is a bit complex, I hope everybody understand a little bit better what Frax Finance is, what are they building, and all these beautiful designs that Frax is bringing to the DeFi space. Thank you, everybody, for coming here to the DeFi Club. We'll be here providing value as much as we can. Thanks, everybody.
Thank you and take care. Bye-bye.
Bye-bye.
You see, when you learn it, You gain, you elevate your game. You see, with knowledge you earn it. The DeFi Club.